Hello, hello, hello. How's it going? How's everyone doing? Just to bring up the chat here. How's everyone's session been? I'm kind of a little bit annoyed with how I managed my last position, but it is what it is. Let me know how you guys are doing. So, really good day in treasuries today. Really good flows actually. There was a big spread happening in the 2 year. As we can see, the 2 year yield is down on the session. So we've basically been a big spread in play, whereas everything else yield wise is gone bid. So some real steepening at play. Now, I'm kind of a bit cheesed off with how I managed this trade, to be honest. So this was the low. The market basically shit itself. I bought and then bought some more, and then it was just really sweepy. So I ended up getting out with like 3 ticks on some size. But my original target was back to POC. This is just the last trade of the session. So yeah, and you can see it's all the way up there. But I suppose at the time, it is what it is. The action was extremely bearish, to be honest. But what a day for treasuries, man. Like, this is probably one of the last days, apart from tomorrow. So the 5 year just capitulated and now been bought right back up. So some huge ranges in treasuries today. Let me know if you guys can hear okay. How's the mic? Considering it seems to be a bit wonky these days, but is the mic all good? Yeah, it looks to be fine. Hopefully it's loud and clear for you. Yeah, James, it was a good session. So I was spreading a little bit today. Main was on the Ultra 10s, did a little bit of UB and ZB, but my main size was in there. And as I said, really good session. Really good session, but just not at all happy with how I managed this. Um, Big extension from the low, and yeah, I suppose I was a little bit hesitant just because the 5 year was also shitting itself at the same time. If the 5 year was, not probed the lows, then I would have held it back in, but there was tons of selling pressure um, in general. But now it looks like we've basically closed out all of that negative delta, now back into the range. So same sort of idea right now. We've got an hour to bond close. Um, we're really not going anywhere. Same as ZB as well. Wow, that was definitely the easier play. Um, yeah, so I think if we do go bid on the 10 year, um, I think we'll maybe offer a way down, but to be honest, the moves have already happened. You're just clutching at straws at this point to trade. Yeah, so crazy amounts. Now we're basically in value for the 10 year yield anyway. So the fair value is like 4.5%. And I think I can't remember if I said this in Discord, but uh, 10 basis points either side is going to be like whack-a-mole. So if we get to 4.6%, um, it'll basically be put back into the 4.5 range because we're going to finish at 4.5, somewhere in there. They basically got 10 basis points of play. You can see relatively, 6 basis point move today on the 10 year. Um, so yeah. Yeah, that was the thing. That was the thing, James. I wasn't expecting it to drop that much. I mean, I think what did it drop from the lows of like 15 ticks or something? Yeah, that was too much. I mean, um, I was in full clip at one point. It's just, I already had a really really good day. So because at the time when that was looking, it was looking so bearish at the time, and the 5 year. The reason is the 5 year action was like really sweepy. So bonds don't typically do that, and it was a little bit reminiscent of last night with FOMC. I'm a little bit PTSD with that from watching that action last night. But yeah, what a sell off in an ES. I've also added this little watch list thing. Um, of course, everything in Sierra is difficult. So this is you have to add your own symbols, you have to resize it all, you have to change all the fields, things along those lines, just to get an idea of what the whole market's doing. Exactly, James. If only. I mean, to be fair, I mean hindsight's a great thing, but uh, the data is so strong for the US at the minute. I mean, even today, mate. 3% revision on last GDP number from 2.8 to 3%. The forecast I think was like 2.8%, and then it's come out at 3.1%. So huge beat in GDP numbers, super strong, and the lowest number in like 6 months. I think it's the lowest print for jobless claims in months as well, because that was upticking a little bit, but that's just dropped as well. So and then to top it off, another beat on housing starts. Not that that really matters, but just the data is so hot coming off the press at the minute. Um, so I suspect any real bid on treasuries will essentially, just be batted back down, um, pretty much. Like any bid, the market has been the 10 years been below this level here, this line, my yellow dot here, POC. It's been below this level mm, since below cash equity cash open here. It's just been sold off all day. Well, it's not sold off. It's taken the whole day to get to this range, but it's been very very choppy back and forward. Uh, I think one of the other plays, to be honest, I was looking at buying down here, but then I ultimately took the trade on the ultra tens. So I've just you know It's what it is. Still finished the day with like 30 ticks, which is great. But when you've been doing this for so long, I get more annoyed about um just managing the trade like a dick. It doesn't matter if I lose or make money. It's just how I performed in the trade, and I wasn't too pleased. But yeah, that happens. I've been at it all day. I've been literally trading for 5 6 hours. Yeah, yeah. I watched it too. We had it live as well, which is crazy. So also as well, the inflation target that was 2% is now been revised to 2.5%, which is extremely strong. Um, and the median dot plot was meant to be 4 last month, and now it's revised to 2. And let's be honest, if these numbers continue the way they are, also um, with new policies and stuff coming in place with tariffs, I, you know, the conversation is not going to be about cutting. It's more likely if they can't get inflation under control. So this inflation number tomorrow, if it's high, I mean we are just going to melt again. This is pretty much the last decent volume session before end of the year. So there's going to be some profit taking, of course. But again, if it comes out a little bit weaker, depending on if it's not going to be a huge miss though. If it comes out a little bit weaker, I wouldn't be surprised to see a bid, and then a little bit of whack-a-mole back down into the range, because we're not going back. So like pre-Powell speech is a completely different landscape now. You know, completely different. The market was pricing in 2 cuts, but it wasn't pricing in 2 cuts and 2.5 inflation target, and it's super hawkish. So changed sentiment for sure. Oh no, this volume again. No. Is it really low, JJ? Right, I'll need to faff around with this again. Advanced audio properties. Let's have a look at that. Let me see if this makes any difference. Let me put this to like 200 or something. I don't know. Does that make any form of difference at all? Close. Any difference? Better? Louder? I mean, I don't think it get any louder. It's up at the yellow thing when I'm talking. If you could let me know, that would be awesome. It should definitely be louder here because it's, yeah, I've got up to like 200% or something. So yeah. You'll be able to hear me breathe at this rate. Okay, right, nice. It's definitely louder now. Sweet. Okay, sweet. Right, we're going to clear the prints here. Okay, how many of you guys are new to the channel? Is this your first time watching the stream? Let me know if you're, this is one of the first times you've joined, or you're one of the regulars to my ramblings. Sounds good. Okay, sweet. Reason being, I'm going to run through what we've got in the charts here because I'm aware it's a lot of stuff for everyone that is, maybe missed it, or I'll run through. Let me get the pen out, the infamous pen. Can I make this bigger? No, smaller. Okay, so 2-year here. This is the 5-year, the 2-year note, 5-year note. This is the 10-year. This is the ultra 10-year. This is the Treasury bond, or known as the 30-year, and this is the ultra bond, which is UB, so the ultra 30. Okay, and these are all correlated to each other completely, so that's the reason why we've got them up. We don't necessarily trade them all the time, but the likes of today, I was playing the whole curve, which is actually quite nice. I was playing a little bit spreading today, which is awesome. And then also, this is the 30-year yield. This is the 20-year yield. This is the 10-year yield. This is the 5-year. And this is the 2-year. You may be asking, why do you have them up? Well, funny you asked that. These are 100% inverse to treasuries. Now, wow, I nearly pressed that. I nearly pressed buy on the end there. So these are 100% inverse, right? So in essence, how the market, when yields go up, the corresponding note or bond should go down. Okay. Same here. So we're plus 5.4 basis points today, so we're relatively negative on the sesh, right? Makes sense. Now, you're probably thinking, well, why do you have the 20 year here and the 30 year, why is this corresponding to this? Because the ultra bond focuses specifically on the longest part of the curve. So its maturity that is targeting the real long end, so like 25 years plus. And the 30 year, it can be really anything below that. So it gives you a nice sort of spectrum between them. So hopefully that makes sense. And the same thing for the Ultra 10 year, just in case you're not aware of what that is. The Ultra 10 year specifically focuses on the longer part of the middle belly of the curve. So specifically in the 9.5 to 10 years, whereas the 10-year note, the ZM product, focuses on like 7.5 to 10. Any questions now that we've ran through what you're looking at? And another thing is they're extremely correlated to each other, massively, right? So you've got each part of the curve up here from the 2-year, which is the 2 and the 5-year, which is the short end, the 10-year and the ultra 10s, which is the middle or the belly, and the long end. So you can see if there's ever any spreads at play. But in theory, if there's not any spreads, they should all be moving in tandem with each other. Cheers, Craig boy. Hopefully you liked it, dude. Nice, Andrew. Hopefully it's going well, dude. Hopefully it's going well. Right, I'm going to click this pen here in case I click on anything. So how's everyone's session been? What's been happening? ES with the VIX being so high. Just so you're aware, this is ES at the bottom left. I just have it just to see the bids and offers. Just so you're aware, this is compressed by 4 ticks. Oh my gosh, what a market. That's crazy. Absolutely wild that that's compressed 4 ticks, man. And that's how thin it is. I mean, it's very much like NQ these days. Yeah, it's basically going bananas, Andrew. It's crazy. Also, this was quite a nice little addition that I found on Sierra. I've never really needed to, but I thought, let me try and add all this into my peripheral so I can just see what's happening in the market. So I've got the dollar index. This is the yen, which is getting absolutely hammered today at 1.8% down on the Bank of Japan, keeping interest rates the same or lower for longer. So it's really, really weak against the dollar. We've got the Swissy that's a little bit bid. This is the euro, which is just down by 11 basis points. The pound is getting absolutely hammered, and the CAD that's going bid. The VIX is up 1.24 to 27%, which is crazy. I need to have another column. Ideally, I would rather know what the VIX is in terms of numbers rather than a percentage. But I mean, I'd imagine we're probably what, like 20 VIX, 22 VIX or something. And then we just have equities, of course. We've got ES, NQ, the Dow, the Russell, and then we have some commodities just to check what's happening. Gold has really, really recovered. This was down like 1% today. Wow, what a bid on gold. And then oil, for some reason the data wasn't coming through, so I just added in the CFD contract, which kind of doesn't really make any difference, to be honest with you. James, I honestly have never even looked at that market. The wildest asset I've traded in terms of exotics is the Mexican peso. I've traded that before. Um, but yeah, I don't actively trade in those other markets, but I just like to know, what's happening in other markets. Is it kind of affects my decision. Of course, I want to know what the dollar is doing. Like everyone should want to know what the dollar is doing in general. But in light of all the crazy data that's coming out, the dollar should just be going bids continuously, so it's not up a huge amount today. I do I was thinking of adding on New Zealand and AUD just to get a full spectrum, but I'd imagine they're going to be pretty much flat on the session. Andrew, I don't think so, mate. I don't think so. The What you could do as well is you can just use the CFD thing. I think it's who did they have it? Was it FXCM or something? That's a CFD broker, right? Um, you can. In fact, well, I'll just show you how to do it very quickly. It'll take me 2 minutes. So this is ropey. This where this arrow is too close to the buy. Jeez, that gives me. What was I going to do there? Sorry, show you how to do that. Okay, give me a second. Oh, I didn't realize that was a button. Look at that. Right. How to do this? You go into the quote boards and then you go to settings, set symbols, so you can see it, and then you go to I'll click on ads, and then you go to find, and then if it doesn't work with the data, then you can go to Forex FXCM or CFD FXCM, and you'll be able to pull in like gold and oil and you know Bund or whatever you want, because the objective is you're not trading it, you're just looking to see if it's up or down in a day, just to get an idea of what's happening. And this is, I think you go to chart, open quote board or something like that. Yeah, hopefully that makes sense. Yeah, it's absolutely wild. 20, 21, 22 VIX is, sneeze and it's off 8 ticks. So we've got a mini bit of VS at the bottom here. But VIX is climbing, so ES is. I think we saw 1% up on ES today, and it's just sold off ever since. Oh yeah, that's a good idea. That's a good idea. I'm not too sure if you can. Maybe you can add them in if that's the case. That would be good. I don't know if you can get real time data for that. I don't really know if you even need the data for it, to be honest. But yeah, it's quite a cool little tool to have at the side. It saves having charts and stuff up. I'm even now debating removing ES entirely because and just having it. But the yen is like 96% correlated to bonds. So it's definitely worth having up. Nice. Yeah, I think it's like 5 minutes delayed or something, mate. 5 or 10 minutes delayed. I think Sierra, you can get it. I'm not entirely too sure, but I think you can get it through Sierra relatively easily. I think they offer like Nasdaq Total View or something that you can use. This is the lowest it's been a while. I mean, we've got an hour and a half left till close. It's down at up 40 basis points, give or take. So this is, we're probably what, approaching like the low of RTH session right now, roughly, off the top of my head. I mean, the VIX has increased like 1% in the last 30 minutes or so. So if that continues to increase, ES will sell off. If we break above 3% on VIX, then ES will dump. Basically, the VIX, I would look at the VIX the exact same way as how I use the Treasury yields. It's the exact same concept. Like you can look at the VIX and know what ES is doing. You know what I mean? Same way as I can look at yields and know what the Treasury market's doing. Like I was saying, this is all she wrote for Treasuries. The move, this was the last play, and I butchered it. Not gonna live that one down, man. 3 ticks out of 25, honestly. And I even made up my mind as well that I was going to hold that one too. C'est la vie. Aaron, how's it going? Yeah, absolutely wild. Wild day yesterday. Extremely hawkish. Fed or Powell when he came out. Oh, look at these guys. See them turned on like a Christmas tree. There we go. There's the range capping algo. So we now know that this will probably be the range for the session. Oh. Yeah, so they've changed it. See, during the summer, just to be the summer months, they turned it on at 1 p.m. Is that right? 1 p.m. US time, which is 6 o'clock my time. They turned that on. All these the range capper, I like to call it. And then in the last couple of months, they have started turning it on at 30 minutes before bond close. So, time is that in US? 2:30? Yeah, 2:30. Nightmare. Nightmare. It may be worth turning on the trade, going to trade, turn on trade mode or something. Chart trade mode on, I think is the correct phrase. So that if you've got them all on and you are on the wrong chart book or something, if you hit the hotkey, then you're out. You know what I mean? If that happens quite a lot. What trade did I butcher? The TN, so the ultra 10 years. So at the time when this broke the lows, it popped below here, right? I thought that I didn't expect this to go down 15 ticks, and at the time the 5 year was kind of here. Let me get the pen. actually, because that'll explain it easier, so you can see my train of thought. So the 5-year was kind of like here at the time, and very typically, and in the 2-year you might as well even forget about, because the 2-year has been a spread today, so it's not really relevant with the spread that's happening. You can see it's there's a real steepener that's happening right now. But anyways, so the 5-year was approaching the lows. Not massively though. It was still holding. There was still some size on the bid, and then I was expecting us to maybe come down into this little area. Bearing in mind this was not here, right? It was smashing the lows. The 10-year was doing the same, and UB was at the lows, but wasn't aggressively hitting. The 5-year broke aggressively, which created this pocket here, and this absolutely shit itself. And in the process, I was like, right, I want to be a buyer here because I'm expecting this is too overdone. And in light with what I was saying earlier, whack-a-mole, if we get up to, basically 4.6% or 4.4%, it'll be whack-a-mole back to 5.5%, right? If you're with me. And I was not expected to go, so I was in my full clip, and I was averaged about here, and I ended up taking like 3 ticks and get out here, right at this spot. But my original plan was to at least try and target this imbalance area where we initially created the pop down, but I didn't. And then, lo and behold, we're basically back up at the, I'm not going to call it the value area high, but it might as well be. So yeah, butchered, man. Cracking trade on the table, especially had full clip in and just didn't execute it well, which happens. And to be fair, reason being is it's kind of late in the session. I traded really well this morning, and this is just back to your mental capital at the end of the day, right? That happened about an hour and a bit ago. Yeah, it happened at like 1:30. So I'd already been trading for hours. So you're never going to make the best decisions or manage the trades the same as you are when you're fresh. It's the way that I see it. And that's coming from me, and I've been doing this for many, many years. When you start feeling tired and a little bit, just the decision making gets a little bit hindered, then, it's time to call it. Also, I've had like 6 coffees today, which probably doesn't help. No problem, Andrew. No problem, matey. So hopefully that explains how I butchered that trade. Yeah, I can't complain though, it was still a good day. And as expected, typically after the market has such a huge move in treasuries, the next day is normally relatively calm. When I say calm, the flows have been awesome today. But I expect it to be, relatively balanced, just because treasuries are not designed to move a lot. So that's one of the biggest repricings the 10 and the 30-year have done. I mean, the Fed has absolutely lost the plot with the long end of the curve at the minute. Just a disaster for them. Anthony, how's it going, mate? Yeah, crazy with the US news coming out. I mean, I'm extremely surprised as to how strong the data is coming out of US. It's just relentless. It's not even like one decent report, a surprise number comes out, the market takes it really positively or whatever. It's just continual It's just continual good data after good data. GDP like 0.4% beat. As well. The inflation data will be interesting tomorrow. How's your trading been, Ants? If you guys can like the stream, share it, tell your dog to also like it, that would be awesome. Holy smokes, the VIX is up 4%. Wow. Let me do this a little second so we can stretch. Oh, wow. I'm relatively paranoid here about accidentally firing into a trade. Yeah, in fact, what I can do here is I'll just drag this up. The yen is relatively unimportant at the moment. I kind of just want to watch a bit of VS in case it absolutely dumps, because now we've got the best of both worlds. We don't need to. There we go. Let me change this to not compressed. So chart settings. Oh, it isn't compressed. Oh wait. Okay. I thought that was compressed. Well, that's reassuring, at least. So this is not compressed. Happy days. It's not as bad as I was thinking then. So yeah, look how easy this is gliding through prices. Yeah, exactly, mate. If inflation comes out higher than expected, I mean, the Fed yesterday revised their inflation targets from 2% to 2.5%, which is extremely bullish. And the data just keeps on getting stronger and stronger. So if this number comes out, we're going to probably see bonds go down, yields go up, dollar go up, and then I don't know what's happening with ES at the minute. It's just simply selling in the Mag 7s that's causing this end of year profit taking. The sell off was definitely, well, the sell off in treasuries and the bid and dollar was definitely news driven. I think the sell off in ES was a bit of both. I think you've got uncertainty coming into the new year, profit taking for end of the year, and of course now, basically, to put it completely blunt with you, the Fed has absolutely butchered it. They should not have cut 50 basis points, a couple of months ago. They're revising stuff way too much on a month-to-month basis. I almost feel like the 50 basis points cut was more of a an election play for them, to be honest with you. Um, so yeah. Because if inflation if inflation continues to go up now, the only way that they can basically curb that is to raise interest rates. So it's not sitting too well. So we'll really see what's going to happen. I mean, the main number they're watching at also as well, which is not great, is I think their target unemployment was like 4.3% or something, and I think something along those lines, and unemployment today is 4.2. So they're not really setting the bar very high, are they? Exactly, Manny boy. That makes perfect sense, dude. Yeah. So for the last week up until FOMC, basically the debt market rules all, right? The debt market is basically the source of truth. Um, so for the last week, treasuries have just been getting hammered, and I don't think anyone was expecting them to revise that so much. You know, because it's went from 4 cuts to 2 cuts to potentially none. The median dot plot is 2 cuts right now, but that could change in January depending on the data. If this inflation data comes out really hot, and the PCE data is the actual inflation numbers that the Fed watches, so if this comes in really hot and a huge beat, they're probably going to have to revise their shit again. And then they're really going to be, the laughing stock because they've just cut 50 basis points, or since they started the easing cycle, they've reduced to 1% or 100 basis points. And yet, potentially in like February, March and stuff, if Trump comes in, there's tariffs, he's super pro growth in general. I mean, it's uncertain what's going to happen there. Who really knows? But that's the way the market's taking it, at least. Potentially, they need to hike, which is a disaster. So we're in for Q1 is going to be interesting, to be honest. It'd be nice to see what the open interest is like when it comes to the roll in February. That'll be good. How do you spot the range cap algo in other markets? Um, you need to have MBO data. The range capper has been on ES. Well, it's obviously not on ES now because, well, it could be. I've just not got the MBO on. Um, it's been with us for about 6 months. I think there was, off the top of my head, I think there was a 50, a 250, and a 150 liquidity each side at both at the bid and offer. It was about 8 ticks. And if it's running today, then it'll probably be something like 12 to 16 ticks away, maybe 16, so 4 points. So it's basically a range capper, but I think it's almost like a protection mechanism. We've been discussing on Discord and stuff of like what actually is the purpose in it, and I kind of feel like it's a bit of a protection mechanism because it's simply tied to the VIX. So when the VIX is higher, it's wider, it's wider away from the current bid and offer. When the VIX is lower, it's tighter. The lowest it goes is 8 ticks. I think the max I've seen it's maybe 16, or they just turn it off. I think so as well, JD. I think if they introduce all that stuff, it'll be crazy. I think next year, if the AI bubble bursts as well, we're going to be in free fall. It's well overdue, man. The market to crash. I mean, this whole year has been fueled by Mag Sevens, so which is just bananas. Yeah, so you tend to get an end of quarter closeout, James, and we get an end of day closeout, and you get end of year closing out as well. Very typically because this is the last month that will maybe make up the bonus for the year, so there's a lot of profit taking across the whole market for bonus time at these big funds. But yeah, always looking forward to the roll. The roll's awesome in treasuries when it's transitioning because you basically get 4 times the volume with a 20 tick range. So it's really hard to not make money. You've heard me say this before, but it's hard to not make money when that's happening. Because every price in the day, as long as you're not buying the top and selling the low, you're gonna make money, right? But the objective when it's in roll modes is you're not taking breakouts. This is for treasuries I'm talking about. Yeah, exactly. Exactly, Ant. So this whole year, I need to find out the stats for it, but multiple reports around it, and the reports suggest that if you take out, the big seven, the Mag Seven stocks, this year would have been a down year in ES if you take out those 7 stocks. So the other 493 stocks in the ES are just not performing at all. Now you're asking specifically about the Nasdaq, then yes, it's even more so the Mag Sevens because it's just 100 tech companies, which is basically all the Mag Sevens. I mean, I'm talking like we nearly. Nice one. Internet just died. Hopefully the stream is not dead and I need to restart it again. That would be awesome. Seem to be connected up. It's back now. Awesome. Woohoo. Good. That's nice. That it's not crashed. It sometimes crashes when that happens and then or OBS disconnects or something. Which is a nightmare. Yeah, exactly. Exactly, and it's been relatively straightforward. In and out, shake it about. You do the okie dokie. Yeah, exactly. Aaron, the roll mode. It's basically the contract rollover. So when it goes from, say for example, it went from December to March, and the objective of the role is no longer price discovery or direction, it's just transitioning contracts from the front month to the forward month. So the market doesn't do anything. So you've basically got like a 2 week period where the market doesn't do very much. A little bit of a sell-off here in the Treasuries. We've got 2 minutes till close. I don't know if you guys have got any questions. I'm taking the close here. There'll be tons of contracts traded. Wow. 14,000 hit the bid there on the 10-year. Wow. Look at the amount of selling coming in. This is crazy. Aaron, so the role is transition from the front month to the forward month. So the market doesn't really care about direction anymore or price discovery. The main concern is contract delivery. So the big funds are focusing on transitioning, for example, to December to March. So just, you know, say there's 2 million contracts today, and look at the size of the range on the 10-year notes. Well, the range is like, say 20 ticks, and it's 4 million contracts, so there's so much volume, but it's in a really tight range, so it's kind of hard to not make money because every price is revisited like 50 times in the session. Hopefully that makes sense. And it's just the bubble. I mean, it can't continue going up like that. There has to be a sell-off. I mean, it's absolutely wild. It's up like 70% or something, give or take. Miranda, so there's a number of ways that basically money goes into bonds. So banks, of course, use it to hedge off their mortgage risk. So they don't, if you own, say, a physical asset, like, say, corn or oil, right? It's the same concept with bonds, but it's easier to explain. Say you physically had tons of barrels of oil in your garage, right? And you said, right, I can currently get X amount of money for this, or I want to sell them next year, right? I've got tons of people looking to buy my oil next year. But the trouble is, you don't know what price the oil is going to be, say, next year, or in essence in 3 months, because the market fluctuates, right? So the whole point of a futures contract is for you to basically go and hedge uh, on say the future contracts, right? So that you're essentially locking in the price. So hopefully that makes sense. It's kind of easier to understand if you've got the physical product, whether it be corn or physical gold or oil. So the same idea with banks for treasuries. So the 30-year and 10-year are mainly there to hedge off the mortgage exposure, and then the shorter end is typically controlled by the Fed. But it's there basically to hedge off credit risk. So if they've got X amount of debt on their books, then they hedge off an amount. That's typically they don't need to win in those specific trades. So there needs to be a liquidity on the other side to fill that, and that will be provided by us, or provided by large firms or market makers, whoever it may be. Hopefully that makes sense, mate. Because if you're thinking about someone doesn't have to lose, of course there's going to be people that are losing, but people are, of course, hedging off their currency risk, mortgage risk, host of different things. And you've got foreign investment that just wants to invest money into bonds as well. There's tons of ways that can happen. Thoughts on crypto? Yeah, a bit of a weird one, to be honest. It's not been a really straightforward. It's been more BTC running the show instead of like all other altcoins pumping. And also the difference between some of these is these are all the matching algorithm on the 5-year to the 30-year is FIFO, which is first in, first out. The 2-year is the K algo, which basically means there's an allocation. I think it's like 40%. So that's why there's so much overquoting on the 2-year for the actual size that trades. So what that basically means is you can overquote and you can basically jump the queue. I think it's like 60% FIFO or something, and 40% goes towards the largest orders. They get a percentage of it. I think it's a max of 250, I think. That's present, it used to be in euro dollars, present in corn and the 2-year. So the matching algorithm is slightly different. And the 2 years, everything else, which you never think, but it makes a big difference in terms of fills. Stephen, how's it going? Exactly, Miranda. That's the thing. The sheer amount of money, mate, is absolutely bonkers. But think about how many people that have mortgages, right? I mean, practically everyone has a mortgage. Not everyone, but you know what I mean. A large majority of the population in UK, Europe, and US have a mortgage, and that mortgage risk needs to be offset. And of course, banks like to borrow short term and lend out long term and basically arb the difference. And then of course bonds are the general vehicle to hedge against inflation in money markets anyway. Nice one, mate. Excellent stuff. Excellent stuff. Wow, the VIX is up 6% on the session. Holy potatoes. We're only up 27 basis points. That is nearly 80 basis points from the highs. We saw 1% today gain on ES, and it's just dumped ever since. Can we potentially dump more? NQ's only down a smidgen. Look at this gradual sell-off towards the lows. Kind of want to see ES melt more, if possible. How do you guys find the Treasury streams versus ES? Is it different? Do you prefer it? Have you not got any preference? Whole market's currently ticking down. I think we get a bounce here at 28s on the 30 year though. It's actually quite a nice one to fade back up into the mean. Because we're certainly not breaking the lows in this, after bond close. We've got an hour left, but we could literally be in a 3-tick range. Slower, yeah, it's a lot slower, mate. It's good practice though, to watch treasuries, because it's basically what happens on treasuries, the same concepts, it just on ES it happens a heck of a lot quicker. Yeah, it's kind of like ES Globex, but obviously much more size. And the main thing is that is apparent is the thicker the book, the less the price needs to move to absorb. So you can literally see someone step up and absorb huge amounts, like 10k on one price. It's the clearest iceberg in history. Need to find. I'll try and see what time it was in the chat, but there was a 3k iceberg on the 30 year today. It just came along, yada yada yada, hit into the bid, and the sellers tried to hit 3k, and the guy absorbed the lot. Then it went bid 5 ticks off of that one guy, which was nice. Dean, much cleaner. Exactly. This is it's exactly it. It's definitely like meditation. It's nice and chilled. You can actually see clear flows. So it looks like right now the market, every single part of the curve is hitting down, with the 2 year being a lagger, but it's been a lagger the whole day. It's wiped off full basis point. This is getting to quite a nice level actually to buy here. Getting to 2 standard deviations, down to the S1 pivot. Time of day is relatively favourable. Someone is showing up to try and do some size. Let's see if they step up and actually take this 500, hit into the bid. They shy away from it. Let's see if this 500 guy is going to pull or not on the 10 year. I'm watching this chart here. I feel like I have to say that because there's so many of them. I would also like to see, I don't think we'll maybe get there, but this is another great level on the 30-year to be bidding here. So we are upticking, yeah. Offer still relatively thick. So you want to see this bid thicken up here. See how there's two-weighing right now? So you want to ideally, when they do clear a price like that, you want to see them take this 346, right? And then go bid, but then thicken up. By thicken up, I mean, you know, they'll clear it and then go like 300 lots. You want to see them lift it, show like 1500, and then hit a few hundred into the offer, which is pretty strong. See, now they've just cleared this, and it's some two-way. We'll see if the 10-year wants to go and test this dude here. They're only hitting 46 in here. 1400 lifted into the offer, absorbed. At this time, the 10-year basically controls everything else. This time. No, it's a completely different program. It's Metastock Zenith. It's basically Sierra 2.0 to set up. Honestly, it's an absolute nightmare of a platform. Extremely powerful platform, but for data and stuff. What am I saying? I've got it here. So this is what I use for main news coming out. I've made the switch from it. And this is the data points that are out today. You can, very quickly go into GDP here. So I've got all these numbers at the drop of a hat. So we can see that the last one here, how it was revised. So it was 2.8%, and it revised to 3, and then we put this massive final print in as well. So really good numbers. I just can't count. I thought it was 40 basis points beat, but it's 3.1 in the prior, revised to 3%. So overall super strong. But it gives you an idea, because before the main data points, I can go in and have a look and see, what's the averages, where are we at, Same here when I was saying for the jobless claims. So the number that came out is like the lowest since, look at this. So we had quite a big uptick in the last number of weeks for jobless claims, basically welfare claims. So now we've ticked down, which again is stronger for the economy in general. So this number, of course, is a little bit scary for the Feds. Now they're not. And then existing home sales, just to run through this data come out, and this is why we sold off for the session. And this is the highest in months we have had the most number of houses started, or existing home sales even. Same idea. But yeah, big print. So the data is extremely strong across the board. So yeah, awesome stuff. So it's not a surprise that there's a continual selling. The only thing that was a bit weird was the spread play. So they're definitely steepening on the curve at the minute. So they're aggressively selling the longer end and basically keeping the 2-year where it is. So it becomes a much more steepening curve. No, it doesn't control everything. No, they're all super correlated, but sometimes you'll see spread plays that goes on. That's why you're best to have the short end of the curve up as well. so you can see when that happens. Because ideally you want treasuries to be in complete tandem with each other. They're normally super correlated, like 98%. So you see how the 10-year ticked up there, took all of that, and then the whole market just ticked up. I don't know if you've missed that, but rewind and you'll notice when this cleared the 3,000 lots, everything else, the whole market took the offer. If you didn't catch that, rewind and have a look at it. I mean, this play, if you were to be bidding here, you're going to be buying here or here, and then the first target is going to be here, just because it's this thicker area. We'll see, we could maybe get back up to here, but it's a bit of a stretch at this time. They could turn this level here, which is going to be 20s into, no, it's not 20s, 19 and a halves into the POC. We didn't have 30,000 contracts at this price to do so, which is not a huge amount. Yeah, I mean that's another mammoth platform. It's not cheap as well. It's like $160 a month. The Zenith platform. So yeah, trading's got some expenses with how you pay data and commissions and stuff. Probably $400 a month or something. That's before even commissions. So typically it should be like one trading day's profits, not even, goes towards, you know, an average day somewhere about the grand mark if you're plugging on well. Yeah, let me know if you guys have got any other questions. Yeah, you guys will be nice and chilled out from watching ES. VIX 4.1%. A little bit of a bid in ES. Let's see. I don't think ES is going to plug the lows today. I would like to see it, but I don't think it's going to happen. Dean, many years, mate. I just trade ES mostly, but ever since it's just went to shit with how thin it is. It's just not a good product in my opinion anymore. I mean, it's not saying that you can't trade it. You know, I just think there's much easier ways and consistent ways to make money in the market. Just because all the cool kids trade NQ doesn't mean you need to. Well, Miranda, the thing is, mate, you know, when you're first starting, it depends how long you've been doing OrderFlow, right? There's no way that you're going to be able to take in all this data. It's not possible. So when you're starting, I would normally just say have one DOM, but the trouble is treasuries are so correlated that you're doing yourself a disjustice without having them. So at minimum, I would say you go with the 5 year, the 10 year, and the 30 year. So you're at least getting, the short, middle, and the end. The 2 years, the ultra short. Well, we're not including the 3 month bank bills or anything. But this is the ultra short, and then you've got this is the short end, and this is the ultra products that can provide some ideas as what's happening. See how the 10 year broke there and the whole market ticked down again? Is us going to test this dude at 500? Let's see if we can clear him, and then what's going to happen. Yeah, the volume and the DAX is pretty much the same as NQ. It's the it's the European equivalent of NQ. It's another shit product in my opinion. Eurostox, however, is an awesome product. You can only trade it on futures though. You can trade it, but the spread is diabolical in CFDs. So. I mean, if only you could spoof on a sim account, mate, that would be interesting. Your orders are not going on the market. Be nice if you could, though. But these markets are super quick. You have to. I mean, look, there's even an algo. There's algos in the 2 year. Look at this guy flashing. See him? Not saying he's spoofing. He's just overquoting. Like I was telling you before, the K algo. They continually do this to overquote, and they pull depending on what the other markets are doing. So like, just very simply, if 50% pulls on the 10 year, they'll cancel these bids. Be nice if that actually happened, as I was saying. They've now added another 500 and no one is taking it. It's hard to get filled in the 10 year at this time. You kind of need to enter a market. I mean, look how thick the book is. If you are to trade the 10 year product, you're probably better trading the ultra because you've got a better chance of getting filled. So Miranda, did I answer that question? So you need to have the 5, 10 and 30 year up, mate, at a minimum. I think having all of the products up when you first start is too much. You're going to have information overload. Massively. But as you get more proficient with things, you can add in more stuff that basically helps the edge. Correlations are extremely important. It's probably one of the most important things, specifically in the Treasury market anyway. But then when you go into indices, if that's what you're trading, you kind of need to know what the Mag 7s are doing, and even now as well, the fact that options have got more and more volume with a lot more zero date expiry options now coming into play. Yeah, nice. That would be the way I would suggest, mate. Go with the 5, 10 and 30 year and see how you get on. You don't need to have ES. ES is not really that correlated. I just have it at the left here, just so my eyes can bob around to watch something move. Can't believe how much of a recovery gold has had today. It was down like over 1%, and now it's flat. I need to check if some of these contracts might be wrong. They might be over to like January or March in some of them. VIX has had a pullback of like 1.5%, so we've got a bid on ES. Yeah, we're not gonna challenge the lows now. If anything, we maybe actually challenge the highs. 70-80 basis points up on the sesh. Looks like we're potentially going to end here. It'd be nice to try and see a bid back up here. Another large day in full 7 basis points, nearly approaching 8. Oh wow, the pounds came back. Wow. That can't be right. If these reset or something here, how can that can't be right? How is the yen up on the session? Wait, what? No. Or is it? No. That has to be. I need to check this. There's something wrong with this resetting here potentially. Interesting. The reason I'm saying the yen was down nearly 2%. It can't be possibly back to flat, right? Someone check that. No problem, Randa. No problem, dude. How long did the treasuries, or the trades take in the treasuries? Sometimes a couple of minutes, sometimes 30 minutes, sometimes a few hours. It really depends. And it all depends what you're actually going for in ticks. If you're going for one tick, it could be a couple of minutes. It could be, if you're trading the UB, it could be 20 seconds. It just really depends. Valentin, how's it going, mates? What's happening? We're still relatively confused here. How the yen is flat. It was down 2%. There's no way that that's recovered. So there has to be something wrong with this coal board, maybe. Unless it has had a real recovery, but then the US dollar would not be bid. It would be flat. Or, sorry, slightly negative. That's weird. I did for many years, Valentine. I did, mate. I did for many years, dude. It's just not a great market anymore with how thin the book is. I mean, look at the book thickness. This is what I go on about the book. Look how thin the book is, right? And just how much it's moving. You know, there's what, 40, 50 bid and offer. You know, you blink and it's moving so much. Look at treasuries. I mean, look at the ultra bond. It's the thinnest. It's the thinnest of the treasuries, and look at it versus the ES. The ES used to be like, see what ZB is right now, the 30 year. This used to be what ES is like. Book thickness, the Euro stocks is like the equivalent of what UB is like. Dean, that's a good question. It's all kind of relative. I mean, I suppose they have their own thresholds. So typically an iceberg, just a rule of thumb, like one to note, is probably double or triple what the average book price is, or book thickness is. So say for example, the book's really thick right now, but say during the session it's 800 in ZB, and say maybe it's 400 on, half of that on UB, and then it's maybe 2000 on the 10-year, 2 to 3K. Well, you're going to be looking for like something between 6 to 9K on the 10-year. 5-year is going to be about 3.5 to 4.5. You're about 1500 on the UB, and then about 2.5 to 3K on the 30-year is typically the thresholds I have in my mind that basically get me paying attention. There was a juicy one today on the 30-year. It was 3K. It was a nice trade actually. It was like the iceberg that sunk the Titanic. So that's a good question, mate. Valentin, how many points? Well, I don't really do it in points. I do it in ticks. It kind of depends on the session, and it depends on the product. I would say I want something, and it depends on the contract sizes. But if I ignore the contract size, a good day for me is somewhere between 20 and 40 ticks. But that's me grinding all day at it. I'd say a kind of mediocre day, like 8 to 15 or something. And again, it depends if I'm trading the longer end or the middle end, as they've got different tick values. Big boy ticks in the UB and the ZB. So the 30-year and the Ultra Bond, they're $31.25 a tick. And then the middle part, so the 10-year products are half of that, and then the 2 and the 5 are half of that again. Full ticks, half ticks, quarter ticks. I just think it's an eighth of a tick on the 2-year as well. And they changed that relatively recently. When they changed that, they just ruined the 2-year product. We went from a quarter to eighth of a tick. So hopefully that makes sense. But here's the thing, just so you're aware. When I'm saying I'm going for 20 to 30 ticks or whatever, I'm not taking like a trade and getting 20 ticks. I'm having like 20 trades a day. Like I'm firing a lot to do that. Ranging between 1 and 4 ticks. I had a few good trades today in the I had a spread on between the 10-year and the 2-year, or the Ultra 10 and the 2-year, because I was expecting the spread to unwind, to be honest. So I was shorting the 2-year and buying the 10s, and it's actually been a nice spread for the session. But I was buying it when it was like here. Yeah, it was before all this happened. POC was up about here at the time. Yeah, and I was buying here, and the 2-year was up here, and I was basically selling the 2s as I was expecting this spread to unwind, which it has. and hold it as long as that, mind you. But yeah, it was a good trade. Yeah, exactly. I mean, NQ, it's not even. I don't know. I don't. I really, really don't understand the obsession with NQ. It's just such a shit market. I really don't get it. I think you will not find. I'm going to be pretty blunt here. You won't find anyone that's been in this business for longer than 10 years that trades NQ solely. And the indices products are steadily getting worse. And if I was to have a trading desk and to essentially manage a team of traders to look after them, none of them would be trading indices, especially at the moment, or they need to have a really, really defined edge on ES, but the limits would be really tight. Providing we had good seats, good seat to get the comms down. I think the main three products would be European treasuries, US treasuries, um, AGS, and Euro stocks. That would be the way to do it. What do you mean? What's the trade? What to trade? Well, you can trade some Eurex products, as I just said there. So you can trade Euro stocks, you can trade corn, you can trade the Bund, Bobble, Shats, the Buxel, or you can trade the oat, or the what you see on the screen, the US treasuries. All the crazy ones like gold and oil, ES, NQ, are pretty shit. I mean, Euro dollar is even a nicer trade than that. For anyone that wants to support the stream, here is a link for you. I'll just pin it if you want to support the stream in any way. Help with my coffee fund. That'd be awesome. Trying to keep some consistency going with this stream at the minute. 2 weeks in the bounce. Not at the right times, I said, mind you, but we'll still get three sessions in a week. Which is pretty hard going after streaming trading a whole day, to be honest with you. People are trading more than the 10-year. Yeah, exactly. They trade the different treasuries across the board. It's not just the 10-year. There's six different products. There's then also the super short term one as well. The 30-day Fed funds rate, the bank bills. And of course there's currencies as well, which you see up there. You've got the basket of currencies. The carry trade's a really popular one. So we did get to here. Let's see if we can break this. Or we just faff around between here and here. Looks like we'll probably finish at like 7 basis points or something up on the sesh for the 10-year yields. Ooh. VIX is now up 4%. We are eerily close to attempting here on ES. Touching one contract into next price in the 10-year, which is not going to cut the mustard. one contract into 4,600. Oh god, poor guy. Honestly. That'll be someone that doesn't realise the book is that thick and they're thinking one contract in. Man, it's a good question, mate. So for me, the Bund is too much. I like the Bobble. Buxo gives me a heart attack. The Shats, the columns are too shit. So it was a toss up between the Bobble and the Bund. So the Bobble was the Eurex. Now the Italian ones were really nice. That was probably when I spent some time with Eurex. They were my favourite ones. I think they have again the short, middle, and long end on the Italian side. They were the nicest thickness, and they moved the same. I think it was like MPBT or something like that along those lines, if I remember what the ticker was called. But yeah, they were the sweetest ones. Really, really nice tight range, super easy to scalp around. I found it when I the time, which I thought was quite difficult, was just even the bonds are very Italian. Like they've got weird starting times and like weird lunches and stuff. So yeah, I've had a little look at it, mate. The Euro stocks is a nice product as well. If US Treasury shut tomorrow and I had to change my trading schedule, I would trade the Italian bonds or Italian treasuries and Euro stocks. And also what's quite nice is you can get the equivalent of the VIX on Eurex. It's not like an additional, you don't have to go to like ICE or something or whatever to get it. And it's all included in the package, which is quite nice. So you can have up the DAX for trading Euro stocks. You can have up the DAX. We'll call it the EU VIX and Euro stocks, of course. Yeah, exactly, mate. That's the thing. It's definitely not as wild. So good products. Though, is that not the Frenchies? Yeah, the boon for me would be nice, but boon, I think you're gonna have to almost take a slightly bigger, not a bigger position, slightly more ticks on it, because if you nail the trade, you get a lot more. A slightly bigger stop, more of a day trading position that you could be prepared to hold it for like 30 minutes to an hour, you know. Whereas if you're taking the Italian stuff or whatever, you're going for 1 to 2 ticks. It's been a while since I've looked at it. How was the MBO there, and how do you find that they move? At this time of the year. I've not traded them in a while, to be honest. Oh, they are. All right, nice, nice. If I had the stamina these days, I would probably trade the morning session of that, then take a break, and then trade the US session. But honestly, I've traded 5 hours or so today, and I'm exhausted. So I don't know if I could do that every day. It's really, really intense watching markets all day. Obviously, it's not intense if you're just staring at candlestick charts, but this is intense. You're using like all your brain power all the time. And I've got like a wire going, and I've got Bloomberg running. You're checking news. It's pretty intense, man. So after hours of doing it, you reach your limit. So I don't even know if adding in a different exchange like that is going to provide any, fruitful endeavors. To be honest, I think for me, you basically need to trade one or the other. To be honest. Max, do you have access to the UK gilts? Are you using CQG, or are you just using Sierra's Urex? Right. Yeah, that was actually what I noticed. I remember as well. It kind of reminded me of, see, the Eurovix. There's like 1,500 or something on the bid and offer, and then it moves. It moves with like 20 contracts or something, so all the orders are fake. Wow. ES is at the lows. Holy smokes. 7% on VIX. Okay. And we've still got the close in 7 minutes. Okay. A lot can happen. NQ's down 50 basis points now. Oh gosh. What an end to the year. $5,900. We could break 900s here, which is wild. Yeah, there's low a day hit on ES. This could be a bloodbath. Let's see, are they going to drill it? What a time to be a prop firm owner in the minute. The amount of accounts of anyone that's trading indices right now that is stubborn, their account's dust, out of shadow of a doubt. In this move right now, this just happened, the amount of people in Top Step or any of these accounts of just they're gone. And people wonder why that, you know, do you trade treasuries? Look at treasuries in this time frame, right? It's not about making money, it's the fact that you're in it for so much longer as well. Especially when you're new, you literally can't go bust trading treasuries because it doesn't move. I'm not saying you can't go bust, but of course you can if you trade like a potato. But it just doesn't have the same volatility and same movement. Obviously, if you trade FOMC like yesterday, you will, but you're just asking for it. Oh, it's caught a bid. Let's see if they can drive it back up. Looks like it. You don't have access to those. Sadly, the data also costs like 120 a month, but I want to try them. Yeah, I want to see what the gilts are like and what the FTSE thickness is like as well. FTSE's a nice market. It's so mean reverty as well. It's even more so than Euro stocks. Yeah, with you. What are you using, mate? Are you using CQG? If you want to get all the weird and wonderful products, you need to use CQG. If you remember Rob that was in, he was a big fan of CQG. I'm just too mean to pay for it, to be honest. Like say I was looking to move away from the US markets, then I would get CQG. Like for you, you're mainly looking at Eurex, then I would definitely get CQG as you can get all of the data. The only thing is you're gonna have to pay per side, which is more expensive. I think it's normally a couple of hundred, mate, but it will depend. I've not checked it in years, so I don't know what it's like these days. But it's a good product. Simply because it's very mean reverty, right? And you know, I'm assuming we're trading pretty similar here. We prefer it when the markets, do this. They come down to this range, then they pop up. So we basically sold off at close, and it's just been bought back up to POC. Super, super classic stuff. Don't need to be a rocket scientist to make money doing that, It's that kind of idea where it does that more consistently than price discovery. Nice one, mate. Yeah, the margins are really good, especially for your Urex stuff as well. The margins are awesome. Oh yeah, I've actually not spoke about that in the stream. God, I'm the worst YouTube marketer in history. I need to try and promote my actual products. God, it's been a long day. Yeah, so the comms are good, especially for starting block, mate. Then there's no commissions, or that's not true. Of course, there's commissions. There is no commitment. There's no commitment on round turns or anything. And if you are looking to deposit a decent whack, let me know and we can probably get them reduced a bit further once you're doing over a couple thousand round turns a month or so. But yeah, check the link in the description if you want to open your own personal account. We've basically got a broker to agree some fantastic pricing for everyone that is out of the starting gates. For treasuries, it's below 3 a round turn. And the margins are extremely low. I think it's like $178 off the top of my head for one contract of the 10-year, which is awesome. 8% margins. Here we go. There is the algo time. Let's see if it's going to drill the lows. VIX is now up 7.6%. You should get the FTSE and the gilts, mate, with that. With CKG, mate. We can bring it up and have a look at it. Send me the gilts and the FTSE. That would be awesome if you could, mate. If you've got access to that, so I can see what it's like these days. Because it kind of makes sense to have a look at the products that you really stay. You know what I mean? I know more about the US economy than I do the UK. It's funny. Inflation number comes out in the GBP or in the UK and I couldn't care less. Yeah. Yeah, looks like we're not breaking the lows today, boys. Again. The 900s look like they're going to hold for the session. Yes, flat. Interesting if tomorrow gives some decent inflation data. So, we'll see. Actually, let's have a look at that while you guys are here. Tomorrow. Why is this taking so long to load? Okay. The Mishi sentiment. Okay, core PCE. Let's have a look. And the core PCE price index, 2.8% was the prior. Oh gosh. Okay, we'll look at that in a second. Okay, so let's look at the core PCE price index. Let's have a look where we're currently at. So the prior is 2.8%. Let's zoom out a little. Okay, so in January, 3.1%. It's the Fed's target was 2%, which is never happening again, to be honest. The last couple of months, 2.6, 2.7, 2.7, 2.7 for the last 3 months, 2.8 in October. So, if we come in again at 2.8, we can clearly see that we're firmed around to 2.7. The new target for the Fed is 2.5. So if we come in tomorrow with like 3% on this number, the market bonds are going to absolutely melt further. I don't know what ES are going to do. Considering how negative they took the last data, then this could be bad for them as well. So in a bad number, we need to see below 2.7. I'd like to maybe see 2.6. Well, not a bad number, but a miss. So 2.6 or lower. If it comes in 2.5, we'll see a rally in bonds. If it comes in probably 2.8 and above, so it just needs to come in line. 2.8 and above, treasuries will likely sell off. And then of course we'll have a bid in dollar. I'm actually trying to get a case for a sell-off in dollar. It would definitely need to be a miss. So that means that the Fed will get a bit of a break, to be honest. So that's the play for the core PCE price index. Year on year, this is the month on month we're looking at. Okay, so 0.3% in October. Yeah, so it's been 0.3% for the last 2 months. And it's 0.2%, 0.2. Yeah, so we're firmly around for the last, like, what, 6 months? It's between 0.2 and 0.3%. So again, if we get a beat up to like 0.5, so if this comes out 0.5, for example, I'd probably see even 0.4, 0.4 to 0.5, and say above 2.8 for year on year. Usual setup: dollar bids, equities dust, treasuries dust, and yields will also go bid as well at the same time. So that's the plan. So the reason why I'm saying that is you guys are trading different markets. So what these numbers come out affects your specific markets. ES is kind of a bit of a coin toss because you might as well, just get, if you're trading ES, you might as well get the other 493 stocks and just press Control Alt Delete on them because you're pretty much just trading the Mag 7s at these days. So that's going to be important. Okay, so the personal consumption expenditure. Again, this number has been relatively bobby the whole year. So I don't think this number is going to make a huge difference. We go in 0.4 to 0.6, it will probably be in line. Bottom we go to is 0.2. So I can't really see this breaking this level. This has been at this level since December. 0.7. Yeah, so we're most likely going to come in at 0.4, 0.3 for this. So that's probably going to come in line because it's literally been in this range since March of 2023. So I can't see it as going to go bananas there, right? So that's pretty much going to come out in line. Nothing's that's going to be a non-event. So the key data is going to be for the 130. Going to come out here. These two main numbers. Of course, the core is the less volatile one. Okay, 2.1, 2.8. Gosh, this has got some real room. I mean, if this goes up to like 2.8 as well. Whoa. And then Mishi at 3 o'clock. Mishi's always a nice number. Market reacts quite nice on it. It's basically going to be the inflation expectations. So yeah, it's basically where we're at. So anyways, now that you've done your homework for tomorrow, you'll be all prepped and ready for the numbers. Let me know if you guys have got any other questions before we look to call it. ES is basically finished flat on the day. Wow. Okay guys, well I hope you have a great rest of your day or evening, whatever you're doing. I'll catch you tomorrow for the inflation data that's coming out. We'll see what way the market is going to take it. I mean, treasuries could really do with a miss, so we'll see what happens. Take care everyone, peace.